Hello traders, and welcome to this video analysis looking at the commodity currencies at the moment in the markets. So traders, as we've touched on, we've seen such a nasty sell-off in oil prices since the coronavirus outbreak hit the markets in early January. Oil prices have now fallen 50% pretty much since the outbreak started to hurt the Chinese economy. And just remember, the oil prices have been falling because China is the world's biggest oil importer. And as China's economy was in complete lockdown, as the government was restricting travel, businesses were closing, they were reducing their imports of oil, the demand of oil was falling. And this is what caused such a nasty sell-off in the commodity prices. And then on Friday, we know we had OPEC tried to have a meeting last week to try to cut production of oil, so reduce the oil supply to rebalance the markets and get oil prices to rise higher. Russia refused to come on board, so Saudi Arabia pretty much turned around and said, fine, no problem. What we're going to do is we're now going to flood the market with oil, drive its value down and hurt your export market. And as Saudi Arabia has directly now tried to take on Russia because they didn't want to form a new deal to help prices rise higher in the markets. So traders, that's the fundamental reason for oil prices selling off so aggressively. And then we know all the commodity currencies have been hit by this lower oil price. So Canada, as we know traders, their main export is crude oil, making up 14%. Refined oil makes up 3%. And then they have petroleum gas, which is made from oil, that makes up 2%. So you're now looking at around 19% of Canada's export is to do with oil. So you can see oil is such a big driver for domestic GDP and money coming into Canada. So when you start to see a situation, oil prices start to slump in the markets, you then get the bigger picture as to why the Canadian dollar starts to see significant weakness, as we've seen against the US dollar, as the currency has weakened by 6% since since oil prices were selling in the markets. And as we can see, the correlation is very, very strong, because previously when oil prices were rising, we had a stronger Canadian dollar, and as soon as oil prices was falling, we have a weaker Canadian dollar. And the same analysis we can look at if we're looking at, for an example, the US dollar, Russian ruble. We know Russia's main exports are oil, make up nearly 50% of their oil. Their exports is to do with oil. So 28% is coming from crude oil, 17% is coming from refined oil. So that's making up nearly 46%. And then you've got an extra 5% petroleum gas, which is made from petroleum oil. So we're looking at 50% of the exports are to do with this one commodity, which is why we've seen such an aggressive sell-off and weakness in the currency when we've seen a nasty sell-off in oil prices, as the Russian ruble has lost now at the moment nearly 20% of its value in the space of nearly 2 months. So that's a very, very nasty sell-off. In the markets, same situation could be said for the Norwegian krona. Again, Norway's main export, oil and petroleum gas, which is made from oil. So 52% of Norway's money coming into the country is coming from exporting their crude oil, petroleum and crude oil, petroleum gas, which is made from oil. And we can start to see now why the Norwegian krona again weakens so aggressively in the market. So this is really important for us to understand. This is what drives the commodity currencies. This is what causes weakness in the commodity currencies. When you have their main commodity price of their export dropping in value, this really does hit these currencies very hard in the markets. Hence why we're seeing such weakness at the moment when we're having oil prices sell off so aggressively. Same situation for the Brazilian real. As we can see, crude petroleum is one of their main exports, and their biggest export market is China. And as we know, China is in complete lockdown at the moment because of this coronavirus outbreak. Hence why you start to see a weaker Brazilian real against the US dollar since the coronavirus outbreak. So what we have to do, traders, we just have to understand at all times, where do countries sell their goods and services to? What are their main exports? Once we get an idea as to the main export of a country, where they're selling their exports to, then we can start to see, okay, if, for an example, China is slowing in growth and we know Brazil is selling most of their exports to China. 22% of the exports are going to China and the Asian region. And remember, the Asian region is completely dependent on growth in China. So if China slows in growth, the whole of Asia also slows in growth. And then you start to see a bigger picture why Brazil's economy starts to get hit. The currency starts to weaken. Most importantly, because the central bank has no choice but to devalue the currency to make sure that exports become even more cheaper, to try to sell as much as they can. Then you get the bigger picture to why these currencies go through such a hard time when their export market goes through difficulty or the actual commodity price of their export falls in value. So moving forward, traders, how do you analyze this? Pretty much, if we get a recovery in oil prices, if we can make up this gap, for an example, and we see oil prices rise by, say, 20%, that of course will strengthen these commodity currencies in the markets. If China's economy can go back to full capacity, then a lot of these currencies will start to see strength, because of course China's oil demand will increase again. And remember, China is the world's biggest oil importer. So if you look at crude petroleum, traders, and I show you this, you can start to see and understand why China is so important for oil prices, literally because China is the world's biggest oil importer, so they are the world's biggest consumer of oil. And as you can see, China buys 18% of the world's oil. So traders, moving forward, again, we just need to monitor this very closely. If oil prices rise, these currencies are likely to strengthen. If the coronavirus outbreak can if the situation improves and China's economy can go back to normal, if the US economy can brush aside these low levels of infections at the moment, then we have a situation that we can be buying these currencies back and trying to make some really good profits in the markets. If the situation becomes worse, then we want to be selling these currencies even more in the markets, because they're going to have to devalue because their main exports are going lower. They're having trouble with GDP growth because they can't sell what they usually sell to the rest of the world at the same pace they was previously. And we start to get a bigger picture to what's going on. So traders, again, we just need to watch the oil price. We just need to keep our eyes and ears firmly on the coronavirus situation. And we just need to monitor how many cases are there at the moment for the coronavirus. Is it improving? Is it getting worse? And once we understand the situation, then this will give us an idea as to how to trade the commodity currency. So I hope that makes sense. And that's my analysis looking at these currencies in today's markets. Thank you for watching.